Great day. I am Tim Homer and I help dealers all over the country fix process in all departments. Today we'll be focusing on accounting department. By fixing process in accounting, I have saved dealers hundreds of thousands of dollars. Today's webinar is on work in process, myth versus reality, and unapplied labor, the profit killer. Why should a dealer, GM, or controller care about work in process? Because many accountants adjust this account to labor or unapplied time at the end of each month, costing thousands of dollars in profits each month. Because that is how they've always done it, or because the manufacturer says to adjust it to the work in process schedule at the end of the month. If you're just writing off a balance and you don't know why you're writing it off, it makes no sense. Especially if you just schedule this account by the RO number, it keeps itself clean and there's no write-off at the end of the month. Potentially, most dealers and manufacturers believe this is an asset. It's even listed on the asset side of the balance sheet. Technician pay is no different than salesman's commission, which is a liability on the financial statement. There is only two entries that touch this account. When service closes an RO with labor on it, there is a credit to work in process, and when you do a technician's payroll, there is a debit to work in process. There could be a third entry if you make a general journal entry at the end of the month to match your service work in process account, which I believe goes against generally accepted accounting principles. And let's take a look at that. From the General Accepted Accounting Principles website, matching principle. The costs of doing business are recorded in the same period as the revenue they help to generate. Examples of such costs include the cost of goods sold, salaries, commission earned, insurance, premiums, supplies, used, and estimates for potential warranty work on the merchandise sold. Consider the wholesaler who delivered 500 CDs to a store in April. These CDs change from an asset inventory to an expense, cost of goods sold, when the revenue is recognized so that the profit from the sale can be determined. This says to us that if you post an entry at the end of the month to debit work in process and credit cost of sales from an open repair order, it goes against the matching principle above. You recognize the cost of sale, but have not closed the ticket, so you've not taken the revenue. This is also a source of adjustments next month. As you close these open repair orders, the DMS does not know you already took the cost and charges it again. Let's go back and look at the two entries that affect work in process in your DMS. If you schedule this account by RO number, this account will keep itself clean unless there's a difference in what you pay a technician and how you cost them out. You will generally have a credit balance in this account. First, nothing hits this account unless you close a repair order or do a technician payroll. When an RO is closed, your DMS posts these ROs into accounting. A simple labor entry would be a debit to cash and a credit to labor sales account, plus a double entry for the cost, a debit to cost of sales and a credit to work in process. These entries are posted continuously throughout the day, automatically as tickets are closed. If we then look at daily at work in process, unless there is a payroll, this account has a series of credit entries. These entries continually add credits all month long. Payroll is the second entry that touches work in process. A simplified look at what accounting you pay a technician, that is a credit to cash and a debit to work in process. You have to import from service the technician payroll. This must happen to bring in the repair order cost by technician that clears out the repair order work in process. The best time to reconcile work in process schedule is immediately after payroll. That is when it is the shortest. You should review any RO that has an RO entry and a payroll entry that still has a balance. It should be 0 except if we partially paid the technician on the last payroll and there's still due some pay on the next payroll. You should also review any RO that has a payroll entry and no RO entry. Review the RO to be sure it has not been closed. Some common errors to look for. The most common is a pay rate difference between payroll and service costs. Someone updated one of them and not the other. Technician bonus pay being charged to work in process. It should be charged to a sub-account of unapplied labor or a bonus commission and incentive on an expense account on some manufacturer's accounting. This makes it easier to track and will keep it out of work in process. Use caution since charging this to unapplied labor or an expense account may impact the service manager bonus. Once scheduled, many things will pop up and are easily identified and fixed, but you must keep on top of this schedule. Finally, I would say if you're still using the expensive lick-em-stick-em forms and not using electronic repair orders, this process will not work as well, and in 2018 we should have switched to ERO by now, electronic repair order. You should look into what it takes to start using this time-saving application. Let's look at what General Motors DUS says about work in process account 247. Work in process, it's a labor, it's an asset, it's an inventory. Synopsis. Account 247 is established to record the amount of work in process, which is defined as the compensation of mechanical and body shop technicians, but not yet sold to customers. Clearly not how a DMS system records work in process today. As each ticket is closed, the accounting happens. If this is only for prepaid labor, a rarely occurring service exception, only happening in the last hours of the ending payroll period for bigger jobs that will not be completed, I don't think we need to account separately for those few tickets, as our DMS service modules could not handle that accounting properly. Moving on in the GM manual, debits to this account would include the total agreed upon compensation, including incentive pay and mechanical and body shop technicians and their helpers. This includes those employed in reconditioning used vehicles and in preparing new vehicles for delivery. If you charge bonus pay to this account, you will not be able to balance work in process as the payroll cost and the RO cost will not be the same. 2. The amount of employees' compensation applicable to productive service work if the individual functioned as a service manager or foreman as a technician. The compensation 3, the compensation of employees not classified as technicians for any portion of their time which is devoted to productive service work. Credits to this account would include the compensation of mechanical and body shop technicians for any portion of their time which is devoted to non-productive work. A better way is for the service manager to have several shop tickets open that are closed at the end of each month. 2. The cost of labor on completed repair orders. And 3. The monthly adjustment to agree with the schedule of cost of labor on mechanical repair orders in process. The monthly adjustment to agree with the schedule of cost of labor on body shop repair orders in process. 3 and 4 go against the general accepted accounting practice principle as we have not yet recorded the sale. Let's look at one of the examples GM provides, that example 3 that GM shows how 3 and 4 are accounted for. Example 3, record the $675 monthly adjustment to agree with the schedule of cost of labor sales on mechanical repair orders in process. General journal entry, debit account 665 adjustments, cost of labor mechanical $675, credit account 247A inventory, work in process mechanical $675. A debit balance represents the cost of labor on repair orders in process. My notes. With today's DMS system, it should only represent technicians' prepaid time on tickets in process. The service work in process reports does show open repair orders with time posted to them. However, adjusting this cost to cost of sales before the ticket is closed goes against general accepted accounting principles. The value of work in process report is useful in balancing the parts inventory because the parts on these open tickets have been relieved from the parts department but have not been relieved from accounting and parts inventory until the ticket is closed, and does not go against the matching principle as a service ticket has not been closed or any of the accounting been posted. And we are adding this number back to the parts department inventory to help us balance the account's parts inventory on the end of month parts reconciliation worksheet. An exception to this is if we are accruing payroll, I would use the work in process report to total labor as my technician's accrued payroll. This entry would be to debit work in process and credit the liability account accrued payroll, not to cost of sales or unapplied time. That costs you profit. However, if you post this to accrued payroll, this does not create an income or expense and seems a waste of an entry. General Motors does provide some notes on this account. This compensation should not include absentee compensation such as holiday, vacation, sick leave, and pay while attending training schools. Separate general ledger accounts should be established for the cost of mechanical and body shop labor on repair orders in process. Month-end open repair orders should be reconciled to the general ledger work in process inventory values for mechanical and body shop. And sub-accounts should be created to separate work in process between mechanical and body shop technicians. Also, if non-productive personnel, service advisors, managers, porters perform labor, then a separate sub-account is advised. This ends the Dealer Uniform Accounting Manual on work in process. To disagree with the manufacturer's look at work in process seems somewhat arrogant. However, I do know how it works in the DMS. If you schedule this account and the technicians pay in accounting and service match, this account stays clean and the balance is almost always a credit. The problem then arises that some manufacturers, including GM, will not let a credit balance in work in process pass the financial statement verification process. If this is a problem, my suggestion is to point this account in the financial statement setup to the payroll payables on the liability, an easy fix without changing the whole service process. With this part of the seminar, we have reviewed scheduling work in process, common problems, the work in process reconciliation, and common things to look for. Properly set up, we will not be writing off thousands of dollars of labor that we have no clue why we're reducing profits. It's just because we've always done it that way. Now let's look at unapplied time, the second big service profit leak. Unapplied time, the profit leak. What is unapplied time? Chrysler defines it. Unapplied labor represents a failure to supply the mechanic with sufficient amount of productive work. This is a reflection against the service department and therefore should be carefully controlled. From the Chrysler Dealer Uniform Accounting System, back to the books, cost of sales account 559D, unapplied labor, mechanical. Debit cost of sales with the wages paid to productive employees for which there is no offsetting revenue or charge to expense, unapplied labor. The adjustment required when the productive labor on incomplete repair orders is less than the balance in the labor in process, mechanical inventory. Credit costs with the adjustment required when the productive labor on incomplete repair orders is greater than the balance in labor in process, mechanical inventory. Do not charge bonuses and unapplied time to cost of sales, as this goes against the manufacturer process and it hides a problem in service that could be if known, fixed. Bonuses for technicians should be a sub-account of unapplied time. Some manufacturers have a bonus account. In GM, it's account 097. However, it is a fixed expense in GM and could affect the management pay by not charging them in the gross. You should take this into account if you use this account when paying service management. Why a sub-account for unapplied time? Bonuses are not a problem that needs to be fixed. When the time comes to start reducing this expense, unapplied time would have several sub-accounts, including quick lane, unapplied, technician unapplied, training time unapplied, and bonus unapplied. If you find there are other dollars going into this account not covered in those sub-accounts, add more sub-accounts. The idea is each sub-account represents one problem area you need to work with management to fix or reduce. Ways to reduce technician unapplied time. You should open several service tickets that a technician would punch on during the month. They are expense accounts, either to service or another department, including shop and equipment maintenance, technician training, shop vehicle maintenance, parts vehicle maintenance, company vehicle maintenance. You should charge these out at retail to show the real cost of these expenses. You need to be careful with each of these tickets and review charges before closing each month. There is a potential for a technician to pad his payroll by charging time not approved to these tickets. I would go so far as require management approval before any time is applied. If we do all of the above, it would be a rare occurrence for a flat rate technician to have any unapplied time. If you have a technician guarantees or a union shop that you must pay for every hour a technician is on the clock, then that will still be unapplied time, and managing schedules and workload becomes very important. Quick lane unapplied time. It may be very unpopular to say, but quick lane service has created a big increase in unapplied time and therefore becomes a profit leak in many stores. Although in the composite I see quick lane with very high grosses, if you take out the cost of unapplied time, I don't think that would be the case. You should do a quick lane study of how many hours each quick lane technician or team produces and how many hours the cost of those hours, including overtime. Quick lane and lube technicians are not excluded for federal overtime rules as they do not diagnose vehicle issues. Let's look at a couple of examples of quick lane production. Example A, lube technicians paid $11 per hour and works 44 hours per week. He averages 8 ROs per day at 0.6 hours per RO and works 5 days per week. Flat rate hours 0.6 times ROs 40 equals clock hours 24. His hours worked 44, this gives you unapplied hours of 20. His wages 44 hours, 40 hours at 11 and 4 at 16 totals $506. Flat rate or flag time is 24 hours at $11 per hour equals $264. Unapplied then equals 242. $506 minus your 264. Another way to look at this is what is the real cost per hour produced. Payroll 506 divided by flat rate hours 24 is a real cost per hour of production $21.08. Now let's look at a team approach. Example B. Team technicians A paid $11 per hour and works 44 hours per week. Technicians B is paid $12 per hour and works 44 hours per week. The team produces 50% more and averages 12 ROs per day at 0.6 hours per RO and works 5 days per week. Their flat rate hours, 0.6 times their ROs of 60 equals 36 hours. Hours worked, 88, gives you unapplied 52. A's wages, 44 hours, 40 at 11, and 4 at 16.50 totals 506. B's wages, 44 hours, 40 at 12, and 4 at 18 totals 672 for a total payroll of $1,178. Flat rate time is 36 hours at $11.50 per hour equals $414. Unapplied is $764 or $1,178 minus the $414. Another way to look at this is what is the real cost per hours produced? 1,176 divided by flat rate hours 36 is a real cost per hour of production of $32.72. If you go to 3 or more loop technicians per job, you might see unapplied time skyrocket. Here are some of the solutions dealers are using. One I see is they calculate the real cost per hour and charge that as the technician pay rate. It can be confusing on the technician's payroll as his pay rate is much higher than his actual pay rate, and overtime calculations can be confusing. From example A, you would charge a flat rate out at $21.08 per hour. A second is you calculate the flat rate hours per job high enough to cover the cost of the technician's payroll. In example A, the technician averaged 0.6 hours per RO and produced 24 hours in his 44-hour work week and made $506. We need enough flat rate hours to produce $506 on 40 ROs. So we take his average wages, 506 divided by $11 per hour equals 46 hours. Divided by his 40 ROs, we need 1.15 hours per RO. You might want to round it up to 1.2 hours. To get that, I might charge 0.6 per lube oil filter and 0.6 per rotate. My caution here is that you don't want to pay the rest of your technicians 1.2 hours for lube oil filter and rotate, and it may require a different quick lube operations for technicians and for quick lane technicians. There are probably other options dealers are using, but both still cover up the fact that you may have technicians that are available but waiting for the next job. So unapplied time in the quick lane unapplied time account keeps that fact that we need to get more production out of the quick lane. I just took one of my 20 groups to a very profitable service department. Their quick lane was reserved for vehicles under warranty that you cannot upsell service on. It is their proving ground for moving quick lane technicians to apprentices. All other oil changes go to apprentices who are being trained in maintenance work and supervised by a technician. No job longer than 2 hours can be performed in this area to keep apprentices available for oil changes. From this group, 1 apprentice is chosen per year and sent to technician school, and the dealer pays for that. The other apprentices keeps training and can earn the right to take on the manufacturer classes on their own time and eventually become full technicians. You should never have a 0 in unapplied time, as this means service is hiding unapplied time in gross. However, it should be reviewed every month, looking for ways to reduce the profit leak. In this seminar, we've given you an overview of work in process and unapplied labor. One of the hardest things for a dealer to say is, I need help. But if you need help, I can help in almost any department. But to be honest, I always feel that I should start in your accounting office. If your numbers are not correct and your process is broken, they need to be fixed before you can deep dive into any department. Be sure to watch for more webinars on accounting coming over the next few months. My next seminar is on how to close your books and transmit your financial statement in 3 business days. I just want to say thank you for watching.